Have you ever wondered why Bitcoin, once above $70,000, has recently taken a turn for the worse? Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. It is a disconcerting situation for many, especially for those who believed in its unstoppable increase. To unravel this mystery, we take a journey into the heart of Bitcoin's current situation, uncovering the three main reasons behind its dramatic fall and what it means for the future of cryptocurrencies. Our story begins with a ghost from Bitcoin's past, MTGOX. Once the largest Bitcoin exchange, MTGOX filed for bankruptcy in 2014 after losing 850,000 Bitcoins in a hacking scandal. Moving forward to today, MTGOX bankruptcy trustees are preparing the distribution of 143,000 Bitcoin to its creditors. This impending release has created significant selling pressure in the market. Imagine owning a large amount of an asset that suddenly becomes liquid. The natural inclination is to sell, especially when the value of the asset has increased significantly since its initial purchase. This mass selling contributes to a supply shock, driving prices down. Let us now examine the world of exchange-traded funds, ETFs. Over the past 10 days, there has been an outflow of $10 billion from Bitcoin ETFs. This outflow is significant because ETFs have been a crucial channel for institutional investment in Bitcoin. The question is, why now? The reasons are multiple. On one hand, institutional investors may be rebalancing their portfolios, taking profits after Bitcoin's price rose significantly earlier in the year. On the other hand, there is a seasonal aspect to consider. As summer approaches, many investors are following the adage sell in May and go away, shifting their investments away from volatile assets like Bitcoin. Finally, we turn to miners, the backbone of the Bitcoin network. This month alone, miners have sold over 30,000 Bitcoins, worth around $2 billion. This sale is part of a larger trend of miner capitulations, in which miners sell their holdings to cover operating costs, especially when the price of Bitcoin begins to fall. Historically, miners' capitulations can signal the end of a bear market, but in the short term it adds significant selling pressure. While these three factors contribute to Bitcoin's current decline, it is essential to view all of this in the broader context of Bitcoin's price history. Despite the recent fall, Bitcoin is still up 40% year to date and 100% over the past year. In previous bull markets, Bitcoin has repeatedly experienced declines of 30% or more. What we are seeing now, a 15% decrease, is well within historical norms of Bitcoin volatility. Let's look at the last two major Bitcoin cycles. Each cycle has seen several declines, with drops of 30 to 40% common. This pattern suggests that the current decline is a healthy correction rather than a catastrophic collapse. People who bought Bitcoin at the beginning of the year saw significant gains, and it is natural that some of them are taking profits now. Another interesting factor to consider is the rise of artificial intelligence, AI. AI is rapidly transforming industries and creating enormous wealth. Some argue that the hype and investment around AI is drawing attention and capital away from Bitcoin and other cryptocurrencies. However, this could be a short-term distraction. In the long term, AI and Bitcoin could be complementary, with AI generating wealth and Bitcoin serving as a store of value for that wealth. Despite the current decline, the future of Bitcoin remains promising. The advent of new technologies, such as AI, and continued institutional interest in Bitcoin indicate significant tailwinds. Additionally, as we approach the fourth quarter, historically a strong period for Bitcoin, we may see a price recovery. Upcoming catalysts, such as the launch of Ethereum ETFs, the presidential election in the United States, and growing interest from sovereign wealth funds in countries wanting to hold Bitcoin on their balance sheets could all contribute to renewed bullish momentum. Without forgetting the possibility that large companies like Dell will follow MicroStrategy's example by adding Bitcoin to their balance sheets. Given this situation, how should investors approach Bitcoin now? One strategy is to buy on dips. For example, if Bitcoin drops to around $57,000, it could be a good entry point. If it drops further to $51,000 or $52,000, it could represent a buying opportunity, as it could be a bearish trap before a significant recovery. For those with a long-term view, dollar cost averaging remains a valid strategy. By consistently purchasing small amounts of Bitcoin over time, investors can mitigate the impact of volatility and benefit from Bitcoin's overall upward trend. In conclusion, while Bitcoin's recent price decline might seem alarming, it is essential to understand the underlying reasons and see them in the broader context of Bitcoin's historical performance. For those with a long-term perspective, this decline could be seen as an opportunity rather than a catastrophe. As always, it is crucial to do your research and invest responsibly. The world of cryptocurrency is volatile, but for those who navigate it wisely, the rewards can be substantial. That said, thanks for following us up to this point. Don't waste your next crypto flight. Thanks for being with us. If you want to stay up to date on the latest news from the crypto world and not miss out on a crypto adventure, hit that follow me button and activate the bell. Ready to go? Then see you in the next video.